Hello, everybody. This is Joseph P. Farrell with news and views from the Nefarium on January 14th, 2016. The year is off to a really roaring start, and as you recall, last week in the news and views, and then subsequently in some blogs, I was talking about the emerging presence in the Middle East and Central Asia of China and Russia as major power brokers in the region. And then, of course, just last night, I had news from a friend of mine in Indonesia that there was some sort of suspected terrorist incident in that Muslim country, and he told me that the view there was that both Iran and Saudi Arabia are trying to stir up the Shia Sunni conflict in that country. So we're watching that very carefully. That's something to watch. But with respect to the Middle East and the destabilization problems there, there is a major financial move underway. And this is a story that broke just yesterday. I found this story, but I think it actually broke on the 9th, on Saturday. But this is a story that is an article run by one of my favorite researchers in the world, F. William Engdahl. If you don't know him, get a hold of some of his books. But this particular story is very important to the emerging presence of Russia and China in the Middle East as power brokers. And listen why. This is titled Russia Breaking Wall Street Oil Price Monopoly. And listen carefully. I'm going to read just a few paragraphs from this article to you. Russia has just taken significant steps that will break the present Wall Street oil price monopoly, at least for a huge part of the world oil market. The move is part of a long-term strategy of decoupling Russia's economy and especially its very significant export of oil from the US dollar, today the Achilles heel of the Russian economy. Later in November, the Russian Energy Ministry announced that it will begin test trading, this is last November, of a new Russian oil benchmark. While this might sound like small beer to many, it's huge if successful, and there is no reason why it won't be. The Russian crude oil benchmark futures contract traded on Russian exchanges will price oil in rubles and no longer in US dollars. It is part of a de-dollarization move that Russia, China, and a growing number of other countries have quietly begun. The setting of an oil benchmark price is at the heart of the method used by major Wall Street banks to control world oil prices. Oil is the world's largest commodity in dollar terms. Today, the price of Russian crude is referenced to what is called the Brent price. The problem is that the Brent field, along with other major North Sea oil fields, is in major decline, meaning that Wall Street can use a vanishing benchmark to leverage control over a vastly larger oil volumes. The other problem is that the Brent contract is controlled essentially by Wall Street and the derivatives manipulations. Latch onto that one. That's huge, folks. The derivatives manipulations of banks like Goldman Sachs, Morgan Stanley, JP Morgan Chase, and Citibank. Now, I'm going to skip a couple paragraphs here further in the article. It was the advent of paper oil. Oil traded in futures, contracts independent of delivery of physical crude, easier for the large banks to manipulate based on rumors and derivative market skullduggery, as a handful of Wall Street banks dominated oil futures trades and knew just who held what positions, a convenient insider role that is rarely mentioned in polite company. It was the beginning of transforming oil trading into a casino where Goldman Sachs, Morgan Stanley, JP Morgan Chase, and a few other giant Wall Street banks ran the craps tables. In the aftermath of the 1973 rise of price of OPEC oil by some 400% in a matter of months following the October 1973 Yom Kippur War, the U.S. Treasury sent a high-level emissary to Riyadh, Saudi Arabia. In 1975, U.S. Treasury Secretary Jack F. Bennett was sent to Saudi Arabia to secure an agreement with the monarchy that Saudi and all OPEC oil will only be traded in U.S. dollars, not Japanese yen or German marks or any other currency. Bennett then went to take on a high job at Exxon. The Saudis got major military guarantees and equipment in return, and from that point, despite major efforts of oil importing countries, oil to this day is sold on work markets in dollars, and the price is set by Wall Street via control of the derivatives or futures exchanges, such as Intercontinental Exchange or ICE in London, the New York Commodity Exchange in New York, or the Dubai Mercantile Exchange. In other words, Russia is taking, if you read between the lines here, folks, Russia is taking direct aim at all of the futures and derivatives manipulation of the price of oil. And after all, why shouldn't it? Because, as this article goes on to point out, and I want to read this to you, quote, Russia is the world's largest producer of oil. So creation of a Russian oil benchmark independent from the dollar is significant, to put it mildly. And it's not just independent of the dollar, but it's independent of the American banks. And this, I think, is a key move here by Russia. How long it's going to stay independent of the American banks is another matter. But given Mr. Putin's ability to push that influence out of Russia, I think we're going to see an interesting year, an interesting tug of war developing between the Kremlin and Western banks over who gets to control how much of these positions in oil futures on the Russian exchange. Now, why is all of this significant? I think it's significant because of two things. Russia, I think, and some of these other nations are going to try and start taking, and I think this is a meme that we're going to see open up this year, are going to try and start taking aim at the paper capitalism that has passed for capitalism in the West for a very long time now. By paper capitalism or finance capitalism, I simply mean derivatives, the manipulation of prices and markets through the manipulation of futures contracts and so on and so forth, not actual deliverable goods. So, in other words, the real economy and the paper economy have been out of step for quite some time. I think this little signal by Russia beginning last November is part of the reason we're seeing oil prices stay so low, because now Russia is entering the mix and is going to be pointing out the discrepancies in the figures that are actually out there. And we've seen hints of this with China and Russia buying gold, another notoriously manipulated commodity where we don't even know the actual amounts of gold in existence, all right? Not even to a degree close enough with any accuracy to approximate anything like a real sum total. All right. So I think this is a huge step because this allows them to question the actual numbers and figures of the Western economy. And this has never been done before. It used to be the other way around. The Soviet Union would produce all of its statistics, and oftentimes they were very inflated. And of course, the West would point out the inflation and manipulation of statistics from Soviet government offices. Now the shoe's on the other foot. And this is going to be a huge, huge chipping away at the authority, as Mr. Engdahl put out, and status of the dollar as reserve currency. This is not going to happen overnight, but it's that status, I think, that's also behind this, because you'll notice that the dollar has been very strong. So it's costing those foreign countries more and more money to pay off debts denominated in a strong dollar. So this is the other move away from the dollar as the reserve currency. This is a move that is accompanying, and I want people to pay attention to this. This is a move that is accompanying Russia and China becoming quietly more active in trying to stabilize the Middle East. And again, you cannot do this. You cannot have all of China's plans, all of Russia's plans for building out the infrastructure in that region of the world and particularly in Central Asia, if you've got an unstable Middle East. And part of the stability here is restoring balance to the world oil pricing mechanism. When it's in the hands of Saudi Arabia and the United States almost exclusively, when other oil producers are locked into that system, that's bad. So what Russia's doing is also this. They're providing a mechanism for other oil producing countries to get out of that monopoly of price fixing. So this is a huge move, folks, and it's going to be interesting to see the geopolitical blowback from this move. It's going to be very, very interesting to see if there's any blowback, and I suspect there will be, to this move. And this story is one to watch very, very carefully in the coming year, folks. That's it for today's news and views. I have it out early today. I've got to run some errands, so everybody have a good one out there, and we'll see you on the flip side. Bye-bye.